What's going on, YouTube? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today, I've got a potential move that could net big profits in a relatively quick amount of time. Stay tuned. I'm going to tell you exactly what that move is. All right, everybody. We know the drill. I'm not a financial advisor. This is not financial advice. I simply share these analyses with you so that you use them as you see fit. But remember, you manage your own money and you manage your own risk. With that being said, if you do like this video, please hit the like button, subscribe to the channel, all that good stuff. We're going to hop into Bitcoin chart because Bitcoin is actually doing this pattern perfectly, and other coins are close, but they may follow in the footsteps. So as of right now, Bitcoin has actually made a very, very nice double bottom pattern. You see from this kind of high area here, and actually even farther up, but for the sake of this pattern, I believe this would be what I would call the top of the double bottom if the move plays out, because prior to that was a lot of consolidation, and you really typically take the long swing down to the neckline, and then it's your neckline, and it's your second bottom, so that's your double bottom. Now, in order for this to play out, in order for this to validate, we have to break above this neckline, clear above, retest it, and then get a high pressure, high buying volume. We have to get a strong move off of that neckline to push above it. This move gets invalidated if we keep rejecting off the 21 moving average on the hourly chart, and I'm on the hourly chart right now. If we keep rejecting off the 21 and keep getting pushed down, the move is rejected, the move is invalidated. It becomes, this could just become a consolidation range where, we make some moves like this, up, down, up a little bit lower, down, and we have this descending triangle. Could very well be the case, but as of right now, there's still potential to break this neckline and have a double bottom, and then the double bottom breakout, you'd be looking for your first profit taking area to be this line of support resistance, because it's the first stopping area. Then this line, and there's not a big gap here, it's not a big difference. It's only about a 1% difference, 1.5%. But again, if you're trading on leverage, that could be 10%, that could be 20%, depending on the amount of leverage you're trading on. So, but these are the stopping ranges, and the initial move would be roughly 2.5%, and the total, if you get to the third level for Bitcoin, would be about 6.3%. And again, if that's 10x leverage, that's 60%. If it's 20x, you're looking at a 120% move. And this doesn't have to be a long time move. This could be very quickly. The move from this peak down to the first bottom was only 25 hours. So 1 day and 1 hour. So you could theoretically get that same move again back to the upside, 1 day, 1 hour, and we're already 9 days in, or 9 hours in. So over the course of the next 14 hours or 15 hours, we could be back up in this range. This is the move, potentially. Again, there's got to be a push above the 21 first and break this neckline. You have to break this neckline, or else the move is not valid. If you get to this neckline and don't break it, it could be a triple bottom, which could still be a bullish scenario where we come all the way down, hit the first neckline, hit the neckline again, come back down in triple bottom, and then we break through the top. That could very easily happen. Triple bottoms aren't as common as double bottoms, but they do happen. But in order for this move to validate, you have to get price action. You have to see the price around 40,700 to 40,750, and that's where you're going to want to take the position to go long. You don't long a double bottom until you have a sound break of the neckline. I can't stress it enough. Now, what I want to show you as well is on this double bottom, This was our first low at 39. We closed this candle at 39,368, and it had an RSI of 18. Wow, that's a very low RSI. The second bottom was a little bit lower than that at a close of 39,281, but the RSI was 32. So this is a bullish divergence. We have a lower low price with a much higher bottom RSI. So that's a bullish divergence. That means that while the price double bottomed, the strength was picking up. The move is starting to create strength. And when the RSI creates strength to the upside of the RSI, that means that the bearish strength is waning. So that could be a very good sign. I'm always looking for divergences to help carry these types of patterns. When you see a double bottom, or a double top for that matter, or even like a head and shoulders at the top of a move, at the top of an uptrend, you're looking for that bearish divergence at the top to show you that the move is waning, that the bullish momentum is waning. Right now, this is showing us that the bearish momentum is waning, and we should get nice pressure to the upside. But again, we've got to break this neckline. I'll show you one more coin, and Ethereum is doing essentially the same thing. Now, Ethereum didn't quite make a clean double bottom because it's slightly higher than the previous, but I'm going to say that that is close enough to count it. That is something where I would count this as a double bottom, even though the price wasn't identical or as close as Bitcoin was. I would prefer to see the second low be equal or a little bit lower, but this one will play out the same way if it plays out. And fortunately for Ethereum, it looks like Ethereum is starting to retest the 21, so it looks like it's broken above the 21-hour moving average and might be starting to test the neckline sooner. So guys, these are the two coins I'm going to go over, and that's all I'm going to give you for this double bottom potential. And for Ethereum, the potential third level price, again, about 7%, and depending on the type of leverage you use, it could be 70%, it could be 140%. That is entirely up to you. Take a look at these moving averages as well. These moving averages are starting to curl. Once the 21 starts to curl up, the 50 will follow. And that's another sign that the momentum is starting to pick up. And even though this isn't quite a bullish divergence, this low here was an RSI of 19. And this low here was an RSI of 36. And that price isn't that much different. It's not a divergence because they are both moving in the same direction, but the RSI is moving much more rapidly to the upside than the price was. So with that being said, guys, I want you to let me know if your favorite coin is making this move, if it's making a double bottom, if it appears like it could be looking bullish. Do we have a bullish divergence? Do we have something similar where the RSI, where the strength is starting to come up, and we could potentially be breaking a neckline of a double bottom to see a rebound to start getting back to these levels? So I hope you enjoyed this video. I hope you found it informative. And as always, until next time, peace.